Good morning, good afternoon, good evening, and wherever you are in the world, you're all very welcome, and thank you for joining us on the Loyalty Leader Insights Webcast. My name is Dave Canty, and I'll be your host for the next hour. I'm delighted to welcome our leaders today to this webcast. We've got Joe DeNardi, Managing Director at Stifel, and Simon Scholte, Program Director, Flying Blue, Air France KLM. Gentlemen, if I could ask both of you to just give a brief introduction of yourselves and what you do, and Joe, we'll start with you.
Yeah, and thanks, Dave, for moderating. Looking forward to the discussion. I'm a sell-side equity research analyst at Stifel. My coverage responsibility is primarily the U.S. airline industry, and so we help our clients, which are primarily institutional investors, make better investment decisions and provide recommendations as to whether they should buy or sell certain airlines. And kind of the cornerstone of our thesis is that kind of the value of the marketing companies and the co-brand partnerships that airlines have are underappreciated. So there's obviously plenty to discuss today. So I'll turn it over to Simon.
Terrific.
Yes, good afternoon, good morning. My name is Simon. I'm from the Netherlands and I'm also based in the Netherlands. I am the program director for Flying Blue, the loyalty program of Air France KLM, responsible for the program rules, but also all the airline partners. And before that, I have worked on several jobs abroad in the sales as commercial director and also as pricing director, working in the pricing and revenue management department of Air France KLM. And looking forward to interact with you.
Terrific. And I suppose before we get started, I should thank our sponsors. So Adara, AMIA, Engage, Hilton Honors, who are the official hotel and venue partner for the Loyalty Summit in the Americas in New York, which is coming in November 17th. And also Radisson Rewards, the official hotel and venue partner for the Loyalty Summit in London, which currently is scheduled for the 17th of September. So hopefully those will still be on the calendar as we go forward. And again, I would also like to welcome all of you around the world and thank you for joining us today. Let's start with Joe with a pretty upfront kind of question based on the current environment and what's going on. Are U.S. airlines at risk of bankruptcy at the moment?
Yeah, so I think a lot of that is right. Any other good answer? It depends. And so I think the primary variable is kind of when demand starts to return. So I think the clearest data point that we've heard is from United Airlines, and they've pretty much said, from a revenue planning scenario standpoint, they're assuming second quarter revenues are down about 90%, and that improves to fourth quarter decline of closer to 30%. To put that into context, in the few months, I think after 9/11, you had a 30 to 40% decline in revenue. So they're assuming it goes from the worst revenue environment the industry's ever seen to the second worst revenue environment 6 months from now. And under that scenario, that they're saying that they would not need kind of the second bucket of government financing that's being offered to them, the debt package that the U.S. government's extending, that they would really only need the first bucket, which is the payroll support. And so, again, I think I would think about it along a spectrum where American Airlines, given their leverage, is probably they would need some improvement in demand sooner than that. Delta and Southwest have a little bit more margin of error. But I think the two unanswered questions, or maybe three unanswered questions, are the terms of the government assistance that's going to be provided to airlines in terms of how expensive it's going to be and how dilutive it could be to shareholders. Obviously, when demand returns, and we've had no indication really in the U.S. that demand has bottomed or is starting to improve, and then kind of what the structural impact of all this is on demand, how much of it just goes away permanently, how much of it takes 2 to 3 years to come back. And so I think if you take United's revenue assumption, which is what we're currently estimating, where by fourth quarter you're down 30% revenue, we think that airlines are able to survive that, but certain airlines, namely American, could face some dilution depending on how expensive the credit piece of the government financing is.
Now, a lot of that government aid today, they're talking about going directly to the employees of the airline as well. Does that introduce some element of risk for the liquidity of the airline itself, or?
Yeah, so I think the first bucket is the payroll support, and that's really designed to use the airlines as a, essentially provide them with capital that they can provide to their employees so that there are no furloughs and employment levels can remain kind of where they are prior to this. And, and then I think so there are restrictions placed on that capital around executive compensation and dividends and buybacks, and then also that airlines have to maintain a certain level of flying activity. And I think that's where airlines are pushing back a little bit in terms of if people are effectively prevented from flying, then they really want to minimize how much flying they're required to do. And there's been some flexibility and relief offered, I would say, in the last week or two in terms of how much flying actually needs to be done. But the terms of the payroll support assistance appear to be, it depends who you ask. Some people thought that the idea that they have to pay back 30% of it were overly punitive. I think relative to what was in the legislation, we viewed it as pretty fair in terms of the dilution that comes from it. But if demand does not come back, or it takes longer for it to come back, there's going to be more capital needed for sure.
Yeah, and Simon, from a European perspective, and certainly you're working within the airline space itself. What's the perspective in Europe?
I recognize a lot what Joe is saying. I think it's not so much different on the European side. Of course, the crisis is huge. I think most of the airlines are now at an index of -90 to -100% in terms of capacity. So that is extreme. We saw a lot of pictures of aircraft standing on the runways and so on. It's really extreme. So that means that there is no cash coming in. Moreover, we receive a lot of refunds of tickets, where the question is, are airlines giving vouchers or refund also? But that means an enormous impact on the cash. Plus, as Joe mentioned, it's not clear how long it will take. There are a lot of different articles, there are a lot of different predictions, but so far we have no clarity when it comes back, but also how it comes back. Will it be gradually, country by country, opening up? And even will there at a certain moment be structural demand drop, which could be driven by the fact that people get used to the fact that they could also do video conferencing, by economic downturn or other fears of traveling. So there are a lot of uncertainties, and at the moment, it's really extreme. So I think we have seen all in the media that many airlines are talking with government also for support, and how that will work out in the coming time. That we will see.
Yeah, we touched on this last week as well, because even as if and when we start to emerge, even as a society, from the current situation, there's going to be a confidence level amongst travelers as well. Do I feel comfortable traveling to get over initially? And hopefully we see some level of confidence return. And we also spoke about the fact that we anticipate that probably will begin in the leisure segment first. How do you see the business versus leisure in the recovery? and then managed corporate versus independent business travelers?
Yeah, there are a couple of angles we could look at that. Personally, and that's also what we have seen in social media, is the first travel that probably will come back is the visit friends and family, the families that have been separated, the friends that have been separated. Once they get a chance, they might take the plane and visit, even if there is a small risk. That will probably be the first to come back. And then the question is, what will happen versus business versus leisure? I think what we saw is when the crisis started, that the first one to stop traveling was the business. I think it's also linked to the fact that they are later booking. So then at that moment they see that there is uncertainty and they might postpone it. Well, the leisure was already booked. Maybe also because of stricter regulations from the company. So yeah, if things would open up, it could either go that corporates will be still a bit more reluctant with travel policies, don't take risks, don't travel, and that leisure would take a little bit more risk. At the same time, leisure is often a bit more early in advance booking versus corporate that are a bit more later booking. So probably corporates could also come back earlier because they are just simply booking a bit earlier. And then if you compare managed versus non-managed, yeah, I can imagine that if it's managed, maybe there will be a bit more stricter policy than if it's not managed, where people could make their own decisions. So yeah, but I don't have the answers in hand, but this is what I would expect, the developments.
Yeah, and Joe, from your perspective, does that ring through?
Yeah, I think I've heard good kind of arguments as to why leisure should come back first, and good arguments as to why corporate should come back first. And I don't know. I mean, I do personally. I feel like one of the first things that I'm going to want to do whenever I can is to go take a trip somewhere. I think, get out of the house. And you know, one of the questions that I ask every company that we cover, and I cover airlines and then some other sectors, is how much of the travel restrictions that you're imposing do you think will become permanent or semi-permanent? And pretty much every company says, yeah, we're really excited to try and cut costs on the other side of this and continue to do what we've been doing to adapt to this. And so I do think that, you know, I don't know, 2 years from now, if leisure is kind of back to normal, maybe corporate isn't, right? Because of that phenomenon. Now, I do think that those austerity measures over time, the urgency to implement them goes away. And so, you know, you had a scenario like 2008, 2009, where the level of austerity being implemented at pretty much every company was probably as severe as it could have been. And several years later, you had some of the best air travel kind of corporate business demand environment ever. So I think I do think that over time that kind of stuff just falls away as the business environment gets better. But I've heard the counter to that this is really the first time where you've had folks forced to do what we're doing now, and that the technology is really in place where you know, it's kind of as good as you can make it. I still don't think it's right. This would be a better conversation, I think, if we were sitting next to each other. But it's good enough. So I think that's kind of how we're approaching it. Is I think leisure probably comes back as people are kind of permitted to fly, and corporate comes back as people are kind of pushed to start traveling. But that corporate probably gets to a lower point than where it was a couple of years from now.
Now, in some of the modeling that you're doing for the US airline industry, what are you seeing? What kind of numbers are we talking there?
Yeah, so I think you know, Delta, United, American, they're all, I mean, you know, second quarter revenues are down somewhere around 90%. So I mean, pretty much all of the revenue that's coming in is, I think, credit card related or ancillary related. You know, United's international capacity over the next couple of months is down 95%. Domestic is down 80 to 90%. So airlines are, for all intents and purposes, not flying or flying very little. And if you talk to U.S. airlines, they'll say, yeah, if we look out into kind of June, July timeframe, even beyond that, like the bookings are actually pretty decent. But I don't think they have any confidence that those bookings are going to materialize. I think they're hopeful. But just a month ago, you had Scott Kirby at United say that their most dire revenue scenario, I think, was a 70% decline in second quarter and kind of improving to 30 by the end of the year, and 70 became 90. So you've had pretty steady deterioration over the past couple of weeks in revenue, and not a lot of kind of encouraging data points that things are getting better outside of maybe some stabilization in China. So it's tough for sure.
So you mentioned co-brand spend there. Do you think airlines should be pushing that at the moment, or what's your perspective?
Pushing it as in terms kind of
marketing to their membership base and encouraging spend on those cards, or in some cases I've actually seen some acquisition emails kind of come out, trying to acquire new members to take those cards. What's your perspective on that?
Right. I think there's probably only so much an airline can do to encourage people to spend. I do think, I've spoken, I think that one of my concerns was you have a scenario here where I'm sure there's language in the contract that United has with Chase, which says that United essentially has to remain an airline, right? And they're not really an airline now. They're not flying. And so what does that mean for that agreement? And I think the way that the issuers are approaching that is, there are some aspects of this that are very unique, but they're remaining supportive of their partner. And I think that that probably applies to what you're referencing also, is that I think the card issuers are doing everything that they can in terms of waiving annual fees and that type of thing to keep the customers on the card, because they want to kind of carry this through to the other side.
Yeah. Simon, in Europe, are airlines leaning in a little bit on the ancillary side of their business? Is there an ancillary side at all for them to lean into? What's your thoughts there?
If you look at the ancillary side, then I guess you mean the commercial partnerships that we have, which a little bit among the financial partners and the other partners. Of course, those businesses are also impacted. So I think there's a drop for everybody also in that businesses, but it's a little bit less dramatic, like the -90 that we see with airline capacity. There could be still some spending here and there. So my expectation is that impact will be less, but it will be impacted as well. So I think for airlines, it's good to not only for loyalty programs not only reliable on the airline part, but also a bit on this part, even though it's impacted.
Where do you both see alliances in this regard? Does it help? Do airlines that are part of an alliance have any kind of assistance from the alliance, or are we all kind of working individually? Let's start with you first, Simon, from a SkyTeam perspective.
Yeah, I think it's always good to have friends, and alliance partners are friends where you can talk with. It's true that initially the impact is very, very strong on the individual airlines to take actions like, okay, what are we going to do with our network? And especially in Europe, there are all the European regulations, which are different by country. So that has to be taken into account as well. The French government is taking different measurements than the Dutch, than the German, than the Italian. So there is a lot of impact on the airlines itself, on the capacity, on the government support, on the regulations for the staff, the travel restrictions and so on. So that there's a big impact that has to be taken by each individual airline. But yeah, the airlines partnerships and the alliances can help with for instance taking some cross initiatives. What we have seen is that there was an initiative from IATA, which has also been strongly supported by the alliances, to not have a kind of quotum to keep the slots, which is the case in Europe. You have to fly regularly to maintain your slots, which of course is not possible in the current circumstances. So they are lobbying also for that, and I see a value of the alliances on this field.
Okay, and Joe, any perspective on alliances?
Yeah, I mean, when airline capacity, when international capacity is down 95%, it's, I don't think airlines are spending much time now thinking about that. I do think, you're going to have an interesting dynamic on the other side of this when, a lot of what Delta and American are doing right now to implement the capacity reductions they are, that's going to structurally change what the airline looks like on the other side of this. So American and United both kind of said, we think we're going to be 15 to 20% smaller once we get through this, because we're early retiring 757, 767s. Some of that is used internationally in these alliances. And so if American is 20% smaller, it makes it really hard for them to maintain a hub in Philly, Phoenix. You're going to have smaller U.S. airlines, and it'll be interesting to see kind of what that means for for these alliances and what this reset in capacity is going to mean.
Right, and to our audience out there, if you want to start submitting some questions, we'd be happy to try and weave those in as we go. Joe, you recently downgraded American due to diminished equity value. What does that mean in terms of bankruptcy and a return to normal operations?
Yeah, so I mean, I would say that the primary driver of the downgrade was a lack of confidence around the revenue scenario that American was using to determine how much liquidity it would need, right? And so it gets very difficult to recommend to anybody that they should go buy American if you don't have confidence that or a good understanding of what their revenue planning assumption is, because that could result in them doing things much earlier than you would otherwise assume, right? So if United is saying, we think 2Q revenue is down 90, by 4Q it's down 30, and under that scenario, we're not going to need government debt assistance. Well, then you have some confidence that they're not going to do anything unless they see that deteriorate. If American's revenue assumption is that 4Q is down 60, then they may feel greater urgency to go and do things that would be more dilutive to shareholders. And so I think that was really the crux of it. I mean, look, American embarked on this strategy to buy back stock and lever up because they thought that from a financial theory standpoint, that was the right thing to do, and it probably was. They just didn't position themselves as well as like a Southwest to be able to withstand something as drastic as this. So, again, investing in airlines right now comes down to what you think demand, the recovery in demand is going to look like, and then how punitive the terms are going to be from the U.S. government. I think what gets missed maybe a little bit is, again, on the other side of this, you're going to have an environment where there's going to be a ton of capacity constraint because of all the capacity being pulled out now, and all of the leverage being put on these businesses. That's going to be the focus once you get through, is deleveraging and improving margins. And that historically has been kind of the time when you've wanted to own airlines, is when they're being forced to behave well from a capacity standpoint. So that's really what we're looking at now, I would say.
And cash is king, I suppose.
Cash is king, yeah, and so you look at Southwest, that they're outperforming every other airline because they essentially entered this with net cash, or essentially no net debt on their balance sheet, whereas American was on the other end of the spectrum, and so Southwest is going to survive through this without much dilution, and then American is just much more dependent on an improvement in demand. That's going to determine kind of what they look like on the other side.
And from what about the low cost model? Because I'm assuming Southwest kind of still fit into that model. Are low cost carriers better kind of equipped, or is it still down to well, I still need to have cash?
Yeah, I think it depends a little airline to airline, right? JetBlue is it's an airline that's, as you know, modeled after Southwest, right? And so you would think that in a scenario like this, they had a very good balance sheet entering this, and yet they've underperformed because they're exposed to two of the markets where the restrictions on air travel and where the virus is kind of most acute, South Florida and New York. But so I think it depends less on kind of the business model and more just on the balance sheet quality in terms of how the airline is doing. I think that we like Allegiant kind of coming out of this because 80% of their network is non-competitive, and so if you come out of this and Delta and American are starved for corporate traffic, well, they're going to go and try and fill those seats with leisure, and I think that's going to put pressure on Spirit, whose model more is to kind of take spill demand that's being spilled. So I think it's what we try to do is find idiosyncratic theses that are less dependent on kind of supply and demand, because I think until you get back to some sort of normal demand environment, it's going to be pretty challenging.
Simon, from a loyalty program perspective, are there things that you are doing to try and can you talk to us a little bit from the perspective of running a loyalty program during this type of crisis, and the demands that are being put on you and your team to try and see if there's a way in which you can help the airline?
Yeah. It's still busy. So I'm still every day indeed receive tons of emails and a lot of meetings. So indeed, all our customers are heavily impacted. So that there's the customer side, and then of course there's the impact on the program where there is suddenly no earn and burn of miles. So towards the customers, we are thinking about how to communicate to them, what to do to them. So we have taken, as Flying Blue, we already have taken some measurements. For instance, no miles expiry till the end of the year, and also for the PLC, so the periodic level check of people that end in March, April, May. We have reduced the threshold for maintain. That is one of the worries of our elite members. If they lose the status, what will happen with them? So that is being addressed currently also by other airlines, and I think that's a question that every loyalty program has. What do we do with maintaining our status of the elite members? And there are also all the measurements about the rebook policy. So what are we going to allow everybody to cancel their tickets, or do they have softened conditions? So for instance, for us, until June, you can cancel free of charge your tickets. You can change them onwards to a later date. So we have put in place those measurements. We have updated the website with all that information. So it's really a crisis mode, and see what kind of measurements we take in that. And then at a certain moment, of course, we'll have to think about recovery and what we do around that. Also, we have stopped all the promotions. We had a lot of promotions at the moment it starts. So we say, yeah, it's not the time to promote air travel. Also, we have adjusted the communication with our life cycle campaigns. Yeah, sometimes you send emails to encourage travel, which is not appropriate in this time. So we have adjusted also that.
So have you kind of repurposed those emails from an information perspective, or have you just stopped?
Yeah, we have limited to really the main email. So if somebody's upgraded, still by chance, even though it's very tough, yeah, you are still receive an email to inform you about that. Or a welcome email if you enroll. There are still some people that enroll, but the basics that are not sensitive, that are maintained. Plus, we have sent some dedicated email to some target groups for which we have taken the measurements, like the expiry of the miles adjustment. Therefore, the people have received emails. But yeah, a lot of emails have been stopped and campaigns have been stopped.
Joe, you've participated in, and I've witnessed a few of them. You've participated in a number of conversations previously about the argument of spin-off of loyalty programs from airlines. Does the current environment kind of favor that or not?
Well, I think what I would say is, and we put out a note to this effect recently, is that, I think executives at every major U.S. airline with a decent co-brand portfolio have said over the past couple of years that you can't view and value the marketing company or the loyalty program separately from the airline business. And yet every one of those companies now is doing that because they're planning to either do a pre-sale of miles to the card partner and raise liquidity that way, or they're trying to use the program as collateral to get money from the government. So, I think that shows a pretty high degree of inconsistency between what reality has been and what their commentary has been. So whether spinning off the program is the right answer or not, I don't know. Certainly it has not worked in some of the instances where it's been done. That doesn't mean it doesn't work. It just means you can't do it the way that Air Canada did it.
Yeah.
Right. You have to be more thoughtful in terms of how you split up value and how you tie the two together. Right. I may not be smart enough to solve for that, but it doesn't mean that it can't be done. But I do think that coming out of this, there's going to be a greater understanding of how valuable these partnerships are because of the work that's being done. I mean, that is the math that every major U.S. airline is doing right now. If Delta goes to Amex, Delta's saying, if we go to Amex and ask for a pre-sale, what are the terms of that going to be? Compared to if we use the program as collateral to get money from the government, what are the terms of that going to be? And they're going to do whatever is more favorable. But I think coming out of this, there's going to be awareness of how, look, the only reason that American hasn't filed yet is because of their card portfolio. So that's the main liquidity buffer that every U.S. airline has between it and like significant equity dilution because they have to take money from the government. So my hope would be on the other side of this, we can kind of have a more honest dialogue about all this and stop saying you can't allocate costs and all that crap, which has proven to not be the case. So, I think on the other side of this, I would hope that there is some willingness to kind of segment the airline from the marketing company at a minimum, right, which is what airlines do. And, if we can get to a point where, kind of monetizing it or spinning it or whatever you want to call that, if you can find a way to do that, then that should be done. But I think right now the focus is a lot, talking to Delta, right? They were getting ready to, in June, provide more transparency and provide more disclosure. And I don't think they're going to do that any longer. But the role that loyalty programs and the co-brand portfolios play is more important now than it has been.
And I mean, I remember when back in the days when some of the majors were in trouble, and Delta emerged from bankruptcy, and a lot of that was based off the prepayment for Sky Miles. Do you see bank partners doing that this time? And would you recommend it?
I do. I think that, I mean, look, in 2019, Delta received $4 billion in cash from selling miles to Amex. They represented 8% of Amex's total billed business and like 22 or 23% of their card member loans. So Delta is, strategically important to American Express. And so American Express is going to do really whatever it can to support Delta. I think that the challenge a little bit is that Amex is suffering through this also. And so what airlines have kind of been messaging is, look, several years ago, we were able to raise, say $1 billion in pre-sale. And now our business is, 4 times larger than that. Our portfolio is 4 times larger than that. And so we think we can raise that now. And so, yeah, I know that that's what airlines are. Delta is just trying to figure out if they feel like they need to tap that last line of liquidity, which is the, financing the loyalty program in some way. What's the most efficient way to do it? To use it as collateral or to do a pre-sale? And so I think the banks will stand behind the airline because these are valuable cards for the issuers. And then it'll come down to whether, the economics, the discount that the issuer wants is more punitive than the financial terms that the government is offering. That'll determine what they do.
So from an economics perspective, has the COVID-19/coronavirus just accelerated an economic decline that was coming, or is it the cause of an economic decline?
Yeah, that may be above my pay grade, but I think if you just look at what what airlines were saying from a demand standpoint prior to this, I mean, it had been never better, I think it was, at least in the U.S., very, very strong. There were pockets of weakness, like in South America or in Europe, where things maybe weren't as good. And so, yeah, I think it's more that the pandemic has kind of created the demand weakness. And yeah, the credit card issuers are not immune from that, right? Amex said, I think last week, they implied essentially that spend was down 15 to 20% in March. After being up, I think, kind of mid to high single digits in January and February. B of A has said something similar to that or maybe worse. So, that business for airlines is not going to be immune. But as Simon said, I think it'll be, less impacted than the airline side of things, which is effectively shut down.
Yeah. Simon, we're starting to get some questions from the audience, which is great. But one of those is: Are airlines doing anything to surprise and delight their customers these days, or are they completely quiet?
No, I think it depends also by airline, and there are 2 ways, two groups where you can look at. You can look at the passengers that still fly. And you can look at the passengers that don't fly at the moment. So the passengers that still fly, I think it's a little bit more ad hoc initiatives. I saw some videos of crew members that make a spontaneous song there was a KLM purser who make a spontaneous song to thank passengers still flying and hoping to see them again. So these are real surprises, I think, for passengers. So that is a little bit for the passengers, and then it are the people that are now sitting a bit at home and not flying with us. So there it's more indeed what kind of gestures are you doing. So I think the loyalty, that is a little bit more in the hands of the loyalty programs, where some actions have been done, maintain or some surprise gifts. But in general, yeah, the interactions have dropped, so they are a little bit less. But yeah, it's a bit case by case, I would say.
So how do we and I'll go to both of you here. How do we actually, as we do emerge from this, how do we actually get to the point of encouraging people back? How do we kind of instill that confidence that to travel? Because there's going to because it kind of feeds into the broader ecosystem in some ways, because without travel, and certainly without air travel, that has the downward effect on the hotel industry. You know, how do we actually, should we be working together across industries to try and instill that confidence? Let's start, Simon.
Yes, yeah, I think it starts with the world to open up, and if there are health restrictions or government restrictions which are now very dominant, then we cannot do a lot. So imagine that world would open up. Then the first step is to go back on the program, to offer the flights. And then it's yeah, we could do some things to stimulate traffic to come back. And I wonder if that it helps to make it, for instance, very attractive with lower prices, with attractive incentives, which could be in any way considered, loyalty incentives, but indeed also price. I could imagine that at a certain moment would pop up. I think it will really go open market by market, so it will not be one shot that the whole world will go up. No, it could be one market goes up, and maybe first it's more Asia, then Europe, then Americas, but it could be different also. So then it's also it's on the one hand side make it attractive, but maybe it's also to make people feel secure to travel, that is health-wise secure, that they don't take any risk. And that is partly coming from government, but it could also, maybe there could also be a role for airlines and hotels in that. Yeah.
Joe, we're starting to hear and see some kind of green shoots coming out of China. What's your feeling on that? Are we keeping an eye on that? Is this a positive indicator for the rest of the world, or is it kind of a false dawn?
Yeah, I don't know. It seems like it's probably a little too early right there. I think you still have to see, does reintroducing travel do anything to case spread and that type of thing. And so I think that'll be important to see how that plays out. But I don't know, it feels like it's a little too early to judge whether that's a real kind of positive indicator. And and I just feel like, just from talking to U.S. airlines, that no one's particularly encouraged by what they've seen yet. Now, again, a week from now, that could be different, and we'll get kind of a good update on all that as airlines hopefully start reporting earnings soon. They were supposed to have started last week, and that's gotten delayed. So, hopefully we get some update on that in the next couple of weeks.
Are we expecting surprises?
No, I think the focus is obviously going to be on kind of cash burn and liquidity and updating unencumbered asset levels, and then the what can be raised from a loyalty program standpoint. But I don't know, based on the conversations that I've had, again, I think airlines look at kind of the bookings they have.
If you can kind of build on that, Are you guys are you looking at what's happening from a China perspective right now with the view of recovering?
Yeah, of course we look at how they come up. Still, I think it's really linked to what will happen in Europe for us, and once we start to recover there. So I think it's somehow different than in China, but of course we can learn from that how they restart the business. Yeah.
I think one interesting data point. Sorry to interrupt, Dave, but I think you had a Chinese-focused cruise line recently start again, and they implemented some changes to their business model. The buffets are still open, but somebody serves you the food, and they're cleaning, disinfecting more frequently, and they're limiting capacity at some of the events on board. But I think for passengers over a certain age, 65 or so, they have to have a note from the doctor saying that they're fit for travel. So I think that's really what people are concerned about the most, is that actually could start to, make it more difficult for that segment of the population to travel. But everything else, I think, was nothing implemented outside of that was all that significant.
Do you
and that's
see
an industry kind of at the, right at the kind of the leading edge of all this, obviously.
Yeah, and I mean, we saw with JetBlue at the very beginning, kind of, at the beginning of their kind of life cycle, if you like, they reduced capacity of aircrafts to 150 seats and ultimately went back up and so forth. Do you see the capacity of aircrafts being reduced or managed in such a way now that it will promote social distancing for some time?
Yeah, that gets, that starts to get really, really difficult. As you know, the margins in this industry are pretty thin. And so if you start talking about reducing capacity by any meaningful level, you're just changing the economics of the business. And so that could happen. But, and then I don't know, is it really any different to get on a Southwest 737 with 175 seats versus a Spirit one, A320 with 220 seats, but we'll see. I guess everything is kind of on the table at this point. But I think at the end of the day, to your point in terms of what do we need to do, I think they're just, from a medical and health standpoint, there needs to be confidence that it's safe to go about your daily life, right? And once people feel that, I don't think there's anything particularly specific to travel. So I think that piece of it needs to get figured out first.
So from a loyal, sorry, Simon, go ahead.
I just wanted to add, indeed, I think it's very unlikely, because you could say that you position passengers a little bit further away from each other to keep distance, but you also have the crew, and the crew still has to serve people. So if you say, okay, people have to sit out away from each other, then how you will handle it with the crew? So I think in the end, if you have to keep distance on board, it will remain very difficult to make that long-term sustainable.
Yeah. From a loyalty program perspective, loyalty programs have been a critical part of the business model for a number of the major airlines now for many decades, and they've evolved over time as well. And because of their success, we have seen some of the newer players and the low-cost carriers really start to invest in their loyalty platforms and their loyalty programs and so forth, and they continue to do that. And we've heard a lot about utilizing their loyalty programs for personalization and whatever. Big capital investments. Do we think that that's still going to be a major focus going forward? Is that something that they should continue to do as we emerge, or should it be parked for a while?
I think, I mean, look, for now, I think, you talk to United and pretty much every capital project that they had is being paused. And so I would think that applies to Spirit and everybody else. Any kind of discretionary spending is being put on hold. But the returns that the loyalty program generates are so high that, yeah, once kind of the restrictions on liquidity ease, that will absolutely be an area of investment. I mean, Spirit Airlines has been really excited recently to kind of redesign and reintroduce their loyalty program in conjunction with, probably a new credit card partnership. Allegiant, I think they've been thrilled by the success they've had on their co-brand card. It's essentially free money for them that I didn't think they knew was really out there. Again, I think we can kind of debate what all this means for the earnings power of the core airline business in terms of how much people are going to want to travel in the future, but I'm not sure it changes the economics that the loyalty program creates. And so I think that, the desire to invest in that is going to remain pretty high or higher.
Yeah. So next week on the Loyalty Leaders Webcast, that's going to be hosted by David Feldman, they're going to be talking about redemption, engagement, and liability. And one of the things we discussed last week, which, by the way, if anybody missed last week's webcast, you can see the replay on the Loyalty Leaders YouTube channel. So check that out, and it's also available through the Loyalty Summit LinkedIn page. But speaking, if we kind of start looking at next week's subject around redemptions and so forth, one of the things that we had said last week was, or at least I said it as a guest last week, so I'll give myself a plug there in that regard, was if I was running a loyalty program right now for an airline or even a hotel program, I would be preparing a redemption stimulus. I'm not saying that we launch it right now, but what I am saying is get yourself prepared for, as we emerge, to really try and stimulate travel. And so one of the best ways to do that is to go to your existing base, members that have miles, have points, and get ready to pull the trigger on a redemption stimulus to try and kick that off. What are your thoughts on that? Keeping in mind that also redemption allows you to recognize revenue into the overall business. Joe, start.
I'd like to hear Simon's perspective on it first, if we could.
Simon?
I think I agree with you. It's of course we have a loyal membership base that have a lot of miles there. So if they we could stimulate them to use the miles to travel again. I think it's a good way also to start filling up the capacity once it comes available. Of course, it doesn't help with cash in. If we are fully focused on having cash in, that is not that. But I think it's just good to, at a certain moment, also have some positive messages. Okay, we start flying again, and you are welcome. Either you pay with miles or with cash. I think that would be both very welcome. So. I think it's just a matter of finding the right moment to start communicating. If you have very limited capacity, are you starting to promote, or do you need a certain amount of flights to start promoting? I think that's what has we have to see.
Yeah, I think I would probably agree with Simon. I think the focus will be so much on liquidity and cash generation that I think there will be demand stimulation, but it'll be focused on low fares. If you look at the scenario like where Southwest Airlines was entering a new market like Hawaii, they did get very, very aggressive with the loyalty program in that scenario. And it seems like to this point, just based on kind of the communications I've seen, that the loyalty focus is on kind of status protection and that type of thing. Like United, I think, led the way in the U.S. at least in terms of offering very friendly terms in terms of what you need to, requirement thresholds, and they've gotten very generous with what the waiver would be from a card standpoint. So it seems like that's where the focus is at this point. And yeah, I think at least in the U.S. there's going to be such a focus on cash generation that I think you've even seen that the redemption for gift cards and that type of thing is being withdrawn in some cases in the U.S. I was actually just looking at Delta's website the other day, and it seems like the valuation that you would get to use miles to go buy an iPad or something is about as bad as I've seen it. So I think they're trying to turn that off as quickly as they can.
Right. Actually, I think American just announced that the spend on their co-brand card now counts towards lifetime status. What are your thoughts on that? And is that kind of hiding a kind of behavior, or is it trying to stimulate?
I've seen as aggressive, promotions related to buying miles and the match that you would get, those are as aggressive as CM. So I mean that's a cash accumulation strategy, and so, but yeah, I think the focus is on, and it's probably, I would imagine the airlines are getting some pressure from their co-brand partners to do this, is to keep the spenders happy and maintain their status. And I think that's what airlines are trying to do.
Yeah, because I think it's kind of interesting. Everything is kind of interconnected here in certainly from an airline travel perspective. And then you've also got people who have lost their jobs. So there's that confidence level, and it's about, do I even want to be spending right now on anything? Am I actually, people are trying to consolidate their debt, and in some cases their cards. So we're kind of in a quandary in some ways, but I guess we'll try and make it work. As we kind of come to the end here, Simon, any final thoughts for those around the world who are managing loyalty programs? What's your perspective on how you're kind of approaching everything, and is it changing from day to day?
Yeah, my final thoughts are, I hope that soon we can meet face to face in one of the next summits, also the loyalty summits. I joined the last one, and it was really nice to have a bit more face to face interactions, also the one-to-one interaction. So looking forward to really go to that mode again. I think the loyalty program is a great asset also for airlines, and we see it also in these times. On the one hand side, it's with diversification of only airline business, but on the other hand, it's also a way to connect with passengers during a time that we are flying less. And hopefully, it can be also a tool that can help when the recovery starts. So treasure that you are working in this business, and hopefully soon all traffic will restart, and we can do some nice innovations again.
Joe?
Yeah, no, I would echo what Simon said. I think I just have a lot of confidence in just kind of the human desire to travel, and we've seen crises similar to this, not exactly like this, obviously, and demand for air travel has been unbelievably resilient historically, and so I'm hopeful that this is no different. But yeah, thank you for moderating everything, Dave.
Yeah, you know, I think you're both right. I think we work in an amazing industry that really makes the world a very small place and connected. And I think, in my experience, loyalty programs, airlines, hotels, they do kind of connect us all on a very human level. So, to those that have joined us today, first of all, thank you for joining us. Don't forget to join us next week for another Loyalty Leaders Insights webcast. That will be hosted by David Feldman, and it will all be about managing loyalty, redemptions, engagement, and liability. His guests are to be confirmed, but you can check that out on the Loyalty Summit LinkedIn page. Also, if you missed last week's webcast, you can see it on the Loyalty Leaders YouTube channel, and we will have the replay of this webcast in the next couple of days. With that, I'll thank you for joining us today, and thank you to my guests, Joe and Simon. And wherever you are in the world, stay safe, and thank you. All the best, guys. Thank you.
Thank you.
Thank you.